Dear friends, we are in the age of disruption, and the technology companies represent some of the most relevant companies that will take us into the next several decades. And hence, I think it's important to have some of the best tech companies within our investment portfolio. However, if today you can only choose one company to invest in, which one would you invest in? In this video, I'll be sharing with you of all the tech companies, which one would I choose to put on my portfolio if I can only choose one. So the tech companies I'm sharing with you today is the one I believe has the highest earnings visibility and one of the strongest company in the world today, bigger than some countries and still selling at a reasonable valuation. And that company is Microsoft. In July 2020, in the Grey Rhino show, I actually shared about Microsoft. And at the time, it was selling at $214. Unfortunately, the share price has gone up about 54%, and the share price today is $330. Well, although earnings have gone up pretty substantially, the company has also grown over the last 1.5 years. Well, it might not be as attractive as a year and a half ago, but I still think it represents a great investment for the long haul. So in today, I will look at the business segments, the growth projection, and I will do some comparison with the rest of the other pure software companies in terms of their valuation and how it compares against weathering the headwinds versus the other big tech companies. Let's go into the business segments. If you look at Microsoft and I divide it up, it's probably three main segments. Okay, the first segments are its legacy business, being the operating system, or the Windows operating systems, and the Office suites. Okay, this today represents about a third of the business. The second one-third represents its fast-growing cloud business, its Azure business. And thirdly, all its smaller portfolios, which includes its Xbox, Bing, LinkedIn, all its other businesses, which altogether makes up about one-third of the business. So we'll look into each of these one-third subsequently. So let's look at the growth projection of each of these segments. So first look at the crown jewel, which is the cloud business, Microsoft Azure, which in current year 2020 to 21, it has grown by 27% year on year. Is this rate likely to sustain? Let's take a look. In the IDC, it actually forecasts the whole cloud spending to reach 1.3 trillion by 2025. Okay, and this represents a compound growth rate of 16.9% per year from now until 2025. And secondly, if you look within the cloud market alone, okay, you can see today the leader is still Amazon, which holds at about 30+% market share. However, Amazon's market share has been quite stable. It has not been growing its market share. So the two companies that has been growing its market share is the second player, Microsoft, which has grown its market share from about 10% in 2017 to about 20% by the end of 2020. Of course, the second one being the number 3, which is Google. And if you look at the others down here, in fact, it has been declining over the years. Okay, so with the growth of the cloud industry as a whole at 16.9%, plus the gaining of market share by Microsoft Azure, we think a growth rate of more than 20% is likely to be sustained for the next 5 to 10 years. Next, let's look at its legacy business, making up of Windows and its Office suites, making up about a third of its business. Microsoft in August this year made an announcement. In March next year, they're going to hike the price of their Office subscription by between 9 to 25%. Hence, in 2022, you're likely to see a jump in the earnings for this segment. However, beyond that, I don't think this segment will be growing extremely fast. Okay, because it's a relatively mature business where Microsoft already have the big lion's share in the market. And hence, beyond the next year, I think this segment will probably grow at somewhere between the high teens and low double digits. Okay? And thirdly, let's talk about some of its other businesses. If you look at it between 2020 and 21, the two segments that have been growing fast are the gaming business, which is the Xbox, and also its LinkedIn. Okay, maybe let's take a look at the gaming, which is Xbox. Okay, the number of console, the Xbox console that was shipped in 2020 was 3.3 million units. Okay, in 2021, it is expected to grow to 12 million units. And by 2025, to grow to 34 million units. So it's actually a big jump, in their Xbox console that's being shipped. And in this year, Xbox is going to launch quite a number of important titles, which will help to bring in more avid gamers to its Xbox platform. And Xbox is actually a pioneer of a subscription-based gaming, which is called Game Pass, where people subscribe to Xbox and they have access to its suite of games. Yeah, and that makes it a very recurrent business, which is a very good business model in my view. Looking at the whole, some of this segment will be growing faster, and some might be a bit slower. I think its enterprise business is also its dark horse. Currently only have a relatively small market share, but it represents a pretty big market. And if Microsoft can break into this space and become more dominant, in fact, it could also be a very fast-growing segment. However, as a whole, I think this segment could be growing at about a mid-teens level. So if I piece together all three, I think somewhere a growth of about 15% per year for the next 5-10 years is highly likely. And hence Microsoft's earnings has a good visibility over the next 5 to 10 years. Okay. However, let's look at valuation, because we all know these tech companies had a big run-up in their share price, especially after the end of COVID. Okay, so are they still at a good valuation to be buying? In general, I set a boundary of about 3 times price earnings growth ratio. Okay, and if it's beyond that, I deem it as too expensive. Okay, let's take a look. So I compare some of the pure software companies, and the year of earnings I'm looking is the most recent, which is currently the earnings year, which has not yet ended. And if you see the third column, I talk about the normalized earnings. What is this? Okay, if you look at this company's financial statements, they have the GAAP earnings. Okay, GAAP means following the accounting standards. And they have their non-GAAP earnings. And the non-GAAP earnings is usually in the management views, what they think is the true earnings of the company, after lessing away the non-cash item and lessing away those one-off items. So which earnings would I use? Personally, I'll be using the non-GAAP earnings, or in this case, I call it the normalized earnings. Except, I will add back one item. And the item is called share-based compensation. So for most of these companies, they don't consider share-based, they add back their share-based compensation. Because share-based compensation is not a cash item. You don't pay like the CEO using cash, but they give him shares. But this is also representing a cost to the shareholders. And hence, when I'm analyzing, I think it is prudent to add back the share-based compensation to arrive at the true earnings of the company. And based on the December 2nd, 2021 share price, I get a price earnings growth ratio. Okay, so for the growth ratio, I'm using Capital IQ as a gauge. Okay, and if you look at it, some of the companies could be quite a fair bit. It's more than 3 times price earnings growth ratio. Okay, the two that's beyond, still within the 3 times price earnings growth ratio are Microsoft and Oracle. However, Oracle's growth rate of 8%, in my view, is too slow. In my view. And hence, I think when I'm looking at these companies, somewhere around a 10 to 20% growth rates, which is highly visible, is where I would prefer. So of all these companies, in terms of the valuation, I think Microsoft still represents a good valuation. Of course, with a caveat, you've got to go back to my previous video. If interest rate were to shoot up, then Microsoft might have the headwind. Okay, the last part of it, I'd like to talk about the macroeconomic headwinds. to the tech companies, especially the big tech. And this includes the antitrust, the global minimum tax, and also the inflation and interest rates environment. Okay, so in July 2020, the lawmakers in US summoned the chief of the big tech companies, right, to talk to them about their monopoly. And if you see it here, who is missing? Right, I think you see the chief of Google, Amazon, Facebook, and Apple. And the person missing here is Satya Nadella of Microsoft. So Microsoft was not summoned because Microsoft, after the antitrust issue in 1990s, right, they have been very, very careful to stay low, stay below the radar. And hence, of the big tech companies, I think today Microsoft has the least risk of the antitrust concerns. And the second one, the global minimum tax. So the G7 nation has came to agree to have a global minimum tax of 15%. And hence, if certain countries are taxed lower than that, they may have to top up the difference. And if you look at it in the earnings, the latest earnings, well, only Alphabet and Microsoft current tax rate is above 15%. What this means, if this minimum global tax is being introduced, Microsoft will unlikely be affected by it because its tax rate is already above the minimum 15%. And what I've been talking about the whole year, which is inflation, right, which now is getting very real, and now we're talking about possibly faster increase of interest rates next year. So which of these tech companies would have a headwind? Well, I think in inflation-wise, we are seeing labor inflation. And hence, if companies who engage a lot of blue-collar worker, I think is going to be most at risk. And hence, of the big tech, Amazon could be one we need to be more careful about, because of its e-commerce business, which need to hire a lot of blue-collar workers. And next, interest rates. So interest rate, really, we need to go back to my last video. So I think Microsoft will have a good runway ahead. So today, I think it still represents a very safe company to be owning if you have a long horizon. However, the ride is not going to be smooth, it's going to be bumpy because of the global macroeconomic environment. So there you have it. If there's only one company I can be owning and a core part of the portfolio in tech, that will be Microsoft. Of course, if the macroeconomic allow you to buy at a lower price, I think we will be good to take advantage of that opportunity. Okay, so with this, I wish you all the best in your investments and may you have prosperity in your investment. Thank you. If you'd like to be listening regularly to the Grey Rhino YouTube to gain more financial knowledge and also investment wisdom, do subscribe below to the Grey Rhino YouTube channel and remember to turn on your notification.